Hello, I'm Foliba Thibault. This is Counting the Cost on Al Jazeera. This week, the weakest economic growth since 2001. Financial institutions warn of a global recession in 2023. We look at the reasons why and ask, is it inevitable? Also this week, after nearly 3 years, Beijing eases COVID-19 restrictions. Can China recover in 2023, and how will it impact the global economy? And turbulent times ahead for countries in Africa and Latin America. Can they weather the storm? Welcome to this special edition of Counting the Cost, where we're looking at what lies ahead for the global economy in 2023. One word that has caught everyone's attention this year is inflation. It's been a major concern for billions of people around the world and will remain so in 2023, as the International Monetary Fund and the World Bank have warned. So when will inflation subside? It will likely be another couple of years before prices come down from the highs they've reached this year. With so many factors at play, from central banks hiking rates to extreme weather events, the energy crisis and the war in Ukraine, it's complicated to say the least. So is a recession looming in 2023? Economists say it's too early to tell if we are technically in a global economic slowdown, but it will certainly feel like it. A dire warning from the IMF is that the worst is yet to come. All around the world, everyday goods and services are becoming more expensive. Rising costs are making life more difficult for many people who are struggling to buy groceries, pay their bills, and fill up their tanks at fuel stations. According to the IMF, global inflation is forecast to decline from this year's staggering 8.8% to 6.5% in 2023, while total output is expected to slow to 2.7% in 2023 from 3.2% this year. The latest figures from China's National Bureau of Statistics show the COVID-19 battered economy slumped in November before authorities eased severe pandemic restrictions. Growth in factory output last month slowed to half of October's rate, while retail sales contracted for a second consecutive month. Property investment in the world's second largest economy fell to its lowest in more than 2 decades, and unemployment is at its highest in 6 months. But economists say China will rebound in 2023. They're expecting growth of 4.5%, up from this year's 3%. Countries in Latin America and in Africa are in for a shock. Most of the economies are major commodity exporters, and the global slowdown will result in weaker demand. The challenging market conditions come as the region is still grappling with the economic fallout from the pandemic and knock-on effects of Russia's war in Ukraine. Economists expect growth in Latin America to halve from 3% this year to 1.4% in 2023. Africa, on the other hand, is likely to avoid a major economic downturn. Despite extreme weather patterns, the threat of food insecurity caused by conflict, and the heavy burden of debt servicing, economies are expected to hold steady. Both North Africa and Sub-Saharan Africa are forecast to grow 3.2% next year. So what can we expect from 2023? Let's bring in our panel of experts to give us some insights into the year ahead. Joining us from Seattle in Washington in the U.S., Alex Capri, Research Fellow at the Henrich Foundation and lecturer at the NUS Business School. From London, Gregor Irwin, Chief Economist at Global Counsel. And from Malaga, Mariano Machado, Principal Analyst for the Americas at Verisk Maplecroft. Thank you all for being with us on Counting the Cost. Thank you so much for your insights in advance. Let me start with you, Alex, in Seattle. China finally loosening its COVID-19 policies. Will this help provide a spark, you think, for its economy?
Well, I think China has a lot to contend with still. Obviously, the property and the housing market issues. I think overarchingly, the geopolitical issues with the United States and the West in particular, when it comes to supply chains, certainly strategic supply chains in areas such as semiconductors and other technology areas. So the easing of the COVID restrictions are going to have to go quite a long way, and people are going to have to see that there is, growth, there's more progress. But China will have to contend with those other overarching issues as well.
Right. And we will be looking at some of the aspects that you mentioned there more closely, the property market, the geopolitical tensions with the U.S. But I wanted to ask you, Alex, many economists and yourself included are saying that this reopening will be bumpy and maybe painful for China. With China playing such a pivotal role in the global supply chains, how do you see the global economy being impacted with this loosening of the COVID-19 policies?
Well, the global economy is really facing a storm, if you will, a perfect storm, and that is it's not just geopolitics, but it's also coming to terms with decarbonization and climate change. There still are issues in the post-COVID era about single source supply chains coming out of China, and there's a conscious effort to diversify those supply chains and to continue to diversify. So even though China has loosened those restrictions, the focus on diversification and restructuring of strategic supply chains will continue.
All right. Gregor, sorry, let me come to you and talk about the U.S. If you talk about China, obviously, the U.S. also has to be looked at very closely. And the U.S. has just published surprisingly lower consumer price index of 7.1% rather than the 3.7% that economists were expecting. Do you think the Federal Reserve, the U.S. Federal Reserve, is starting finally to have a firmer grip on inflation?
Yes, it's a welcome sign that the headline inflation number is falling. I think what is also reassuring is that core inflation also appears to be relatively under control. We obviously saw a 50 basis points increase in interest rates. It was also interesting to hear what Jerome Powell, the chairman of the Federal Reserve, what he had to say. He was signaling, of course, that the Fed will be very watchful about inflationary pressures in the US. But I think also if you did listen carefully to what he said, it does appear that the pace of tightening will slow in the US and interest rates are likely to peak at some point next year.
Gregor, before I go to Mariano, what about global inflation? Do you expect that to stabilize?
Well, global inflation will stabilize if for no other reason than simple arithmetic. The annual inflation rate, the headline inflation rate that most people focus on, that's a measure of how prices have increased over the course of the past year. And of course, a lot of this has been driven by higher energy prices and higher food prices to some extent, but mostly higher energy prices. And the big spike in energy prices, or at least the first spike in energy prices, came about a year ago. So just by virtue of the fact that those earlier price increases will fall out of the calculation, that means that headline inflation will fall.
Right.
But what policymakers focus more on is core inflation, and that will fall more slowly. So the problem of inflation will only disappear slowly if policymakers stay firmly focused on the challenge.
All right, Mariano, let me come to you now. As we said in our introduction, African and Latin American economies are expected to face turbulent times in 2023. Talk to us about the internal and external shocks that are likely to undermine these two regions' growth prospects.
That is an excellent question, and thank you for having us today. And actually, our data shows us that during 2022, we saw the largest jump in terms of countries that increased the risk for civil unrest in both regions you're mentioning specifically. And we are expecting a group of nearly 40 countries further suffering an uptick in the probability of civil commotion by March 2023. And the underlying factors in this case, in our views, are two. The first one is, of course, inflation. And as my colleagues were saying, we are still undergoing discussions in the regions about the effectiveness of monetary policy to basically deal with what are rather informal economies in which central banks have less capacity to operate on the drivers of these trends. And the second is, and this is a very interesting and important point for Latin America in particular, is the ability of institutional mechanisms to funnel discontent, sustain discontent. Given the two trends are continuously to be colliding, we expect the 2023 outlook to be bleak, if you allow me that.
Yeah, and social discontent could be a key factor here. Looking at Latin America, more specifically Brazil, and we've seen this new shift to the left, the so-called new pink tide in Brazil, for example, with the return of Lula to power. Brazil's government has cut its 2023 GDP growth forecast to 2.1%. And the new president, it seems, may need more than $39 billion in extra government spending, which is going to be a huge challenge for him, isn't it?
Exactly like that. It's very interesting because, as you mentioned, we are witnessing what appears to be, is now confirmed, a return of what we can call the pink tide. But unlike the pink tide of the early 2000s, what we see massive differences between the two of them. One of them, key one, it's the ability of the groups that are reaching office now and the cohesion of those groups. And second is social patience. So basically, even for comebackers such as Lula, which is not the only one in the region, but could be the most substantial in terms of the outstanding political comeback he just pulled during this past 2 years, patience is running very low in the case in Brazil, and the ability to deploy policy and the ability to control that spend and to ensure all of the promises he has made during the campaign remains to be seen.
Do you think he can fulfill his electoral promises of lifting people out of poverty?
Well, I think it's going to be central to his policy agenda. But the thing is, unlike his previous two presidential incarnations, this time around, the PT, his party, the Workers' Party, plays a primus inter pares role, if you want to, one among many in a big, big coalition that he required to actually achieve power. And based on the results of the election and a very adverse congressional setting, I think this will be a quid pro quo situation. Every bill, every reform, every decision will need to be negotiated. So we will need some time to see how that unfolds.
All right, Alex, let me come to you now and let's talk about the U.S.-China relationship, because we've seen that the U.S. restricting China's access to technology, capital markets, as well as U.S. companies to invest, their ability to invest in advanced technology in China. What impact has it had, not just in the high-tech sector in China, but also in the U.S.?
Well, it's actually spawned a bit of a technology investment surge in the U.S. So the Semiconductor Industry Association just reported that since August, when the Chips and Science Act was essentially enacted, $280 billion of investment towards technology investment, innovation. The private sector, since the enactment of CHIPS, has invested some $200 billion just towards fabrication, so foundry-related activities regarding semiconductors.
Okay.
And it's happening not just in Arizona or Texas or Silicon Valley. It's happening in lesser-known parts of the country, primarily through public-private partnerships. So I do expect in 2023 to see an increase in public-private partnerships, governments working with private industry, and increasingly academia and research institutions to basically pursue economic growth.
Okay, so more partnerships to pursue economic growth. Gregor, let me come to you now. We've talked about the U.S.-China relationship. We've looked at Latin America. Let's talk to you about Europe and the energy crisis there, which we've seen has been a big issue this year. And this energy crisis is expected will cause a mild recession in Europe. What do you think this will mean first for the European Central Bank's fight against inflation in 2023?
I think most European economies will still grow in 2023. Certainly some economies are likely to see a recession. Amongst the larger economies, the UK and Germany are the most likely to see a recession. In Germany, that is very directly related to the energy situation. Industrial production in Germany has been hit hard by higher energy prices. In the case of the UK, I think there are a number of factors at play, political uncertainty impacting also on business investments. Other economies may also slip into recession. The Swedish economy is one that is perhaps on the margins. The European Central Bank is trying to ensure that it addresses the inflation problem. The inflation problem in the Eurozone is not as bad, both in terms of core inflation and headline inflation, as it is in the US or indeed in the UK. Interest rates do have further to rise. The ECB will most likely raise rates by another 50 basis points today. The ECB also faces the challenge of, as it reduces the size of its balance sheet, so as it begins to unwind the large accumulation of assets that's taken place over several years as part of its quantitative easing program, it also needs to pay careful attention to what happens to the cost of borrowing for governments right across the euro area. For now, that looks like a manageable task, but it certainly complicates the monetary policy challenge the ECB faces.
What about, Gregor, the scramble for gas? Do you think it'll be worse in 2023?
I think so far the autumn has seen gas storage levels at reasonably comfortable levels in Europe. That reflects a relatively mild early autumn. I think the challenge will be maybe not so much what happens this year and through the summer, but what happens next year. There'll be the task of trying to replenish gas storage levels. A lot will depend on the weather. I can tell you that right now it's very cold in London and it's cold in much of Northern Europe.
Right.
So that is a factor. But let me just point to one very notable success. In November, average energy demand in the EU was down by about 24% compared to the previous 5 years. That's quite a remarkable effort in terms of energy demand reduction.
All right, Mariano, the Latin America region has perhaps been the biggest beneficiary in the surge of energy prices because of the war in Ukraine. Is that still going to be the case, you think, in 2023? What are the key trends in terms of commodities for the Latin America region?
That's an extremely interesting question because it speaks of a twofold trend we're seeing in the region. Short-term demands for non-renewable energy sources, as you just were saying, as a result of the conflict in Ukraine, are benefiting most of the producers, both private and public, in Latin American space, among them Pemex, Petrobras, and other players. But at the same time, what we're seeing is beyond that short-term opportunity, we're seeing a long-term development trend in terms of everything that is needed for the energy transition as a way to just move away from fossil fuels. So the question now is how long this window of opportunity for short-term demands will persist, and if certain players, such as Argentina, in example, has an amazing play in terms of energy, will be able to ride that trend. Yeah. And second to that, if countries, unlike other opportunities, will be able to seize the opportunity in relation to commodities needed for the energy transition in general.
Now, Mariana, you talked there about Argentina, and I do want to find out more about Argentina and its debt, of course. It's reached a deal to restructure the $1.97 billion debt it owes to the Paris Club. Do you think this is a good deal for Argentina, and can it overcome its debt problems ahead of the 2023 elections?
We need to take a step back here and just recap the latest set of events, including the one that you mentioned, Folly. Argentina reached an agreement with private bondholders by itself. Argentina reached an agreement with the Paris Club and also with the IMF. But at the same time, the current administration has taken the current debt levels to peak right a few months ago in October, nearly to $400 billion, the highest mark ever in the country's external debt. So what we're seeing now here is a rather controlled situation of the external front, but not because of resolution, but because of the postponement of payments. And somewhat worried, where some people are, including us, are worried about the domestic market debt, because also there has been this postponement. And what we're seeing now, although there have been successes in terms of the of seizing issuance in the local market, we're seeing this snowballing. Chances of favorable resolution before the 2023 October election are slim, but we will need time to see how that unfolds.
So it may take time to see if Argentina is able to resolve this debt issue. Alex, China also has a debt problem, the debt-ridden property sector. Will the property market woes be over, you think, in 2023?
No, I think this is a systemic issue that's been part of the Communist Party's growth plan, right? It's just build, 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 build. And so the overcapacity issues, I think, will continue, not just in the property market, but in other areas as well. I mean, we've seen overcapacity in steel, for example. And so this is definitely a part of a much wider systemic issue, I think, for the Chinese economy.
Gregor, another big issue this year was, of course, cryptocurrencies. And as 2023 comes to an end, cryptocurrency traders worldwide are having really a rough time. We've seen the collapse of FTX, for example, cryptocurrencies dropping by more than 60% in 2022. What's next, you think, for cryptocurrencies in 2023? What does the future look like?
I think what's next is probably regulation, more regulation. There have been a number of reasons why that's been slow to happen, partly because whether or not national regulators really have a mandate to regulate crypto has been unclear, and many regulators have been kind of slow to get in on the act. But I think what FTX has shown is that many cryptocurrencies are just too big to ignore.
Right.
And regulation will need to extend just beyond the sort of simple, straightforward aspects around money laundering, which is complicated enough, but that is something certainly which the UK regulator already has a regime for cryptocurrencies. So we're going to see that regulatory perimeter for crypto extend quite a bit next year and thereafter.
Alex, your thoughts about the future of cryptocurrencies?
Yeah, I just don't see it having a particularly bright future. You know, I think Gregor mentioned regulation. I think the problem with crypto is it's very, very hard to regulate. It's very difficult to regulate just by its nature. So, you know, as an investment, sort of a holding investment option, yes, you know, people will continue to invest in it. It will probably, you know, stay in the portfolios of larger investors. Where I see a digital currency going, and crypto is not a currency, I should say, not a viable currency in my opinion. But central bank backed digital currencies, I think, will be something that we'll see more interest in 2023.
All right. We've just got a few minutes left on the show, and I'll ask you for a final word about your outlook, the big picture for 2023. But I want to ask you first, Mariano in Malaga, about the outlook for African economies in 2023. We've seen a handful of nations defaulting on their debts, like Zambia. Ghana's currency, the cedi, had its worst performance in 2022. What is the outlook for these African economies, and are they going to be able to reorganize their local debt?
There's a very interesting question. And actually, one factor we need to take in mind, we might need to take a step back and look at how the situation of these countries, what represents for different international stakeholders that could help with those situations, such as the IMF, such as the World Bank or other multilaterals, because there seems to be not so tacit, but rather explicit agreement that across emerging markets, including the African nations, but also in Latin America, there is the need to sustain economies to allow for economic recovery to just continue, regardless of this of the challenges of patchy economic recovery, if you want to. So we expect this mixture of domestic inability and international decision to sustain these economies.
Gregor, your thoughts about the outlook for African economies in 2023?
Clearly, there's a COVID hangover. There are countries that are suffering from higher food and energy prices. There are countries that are suffering from a strong dollar, higher interest rates. So, yeah, I think there are a number of countries that have a debt problem, and those problems are likely to come to the fore. Next year, we already have Ghana, which has announced recently that debt to GDP is about 100%. They will need to have a debt restructuring. I think we'll see more of that in 2023. Of course, some countries are doing well, and they are the commodity exporters.
We've got a minute left on the show, so I want now a quick prediction from all three of you on what will the economic landscape in 2023 look like at the end of 2023. Alex, let me start with you in just a few seconds.
I think it will continue to fragment from a supply chain perspective, and the supply chains will break into three areas: strategic sensitive supply chains, which will fragment; a middle gray zone that features dual use technologies, and which of course spill over into all other industries; and then sort of another band of innocuous stuff that nobody really cares about. So it's going to be complicated.
All right, complicated. Mariano, your thoughts?
We are still facing subdued demand. We will need to see how that goes on the global level, but also we need to see a lot of political and technical decisions on behalf of emerging markets when it comes to seizing the opportunities that the landscape is presenting, especially in developing certain commodities for the energy transition.
All right, Gregor, in London, you have the final word. What will the economic landscape look like towards the end of 2023?
So lower inflation for sure, interest rates at a turning point, and even more uneven outlook for growth. And fragmentation, I think that's absolutely right, but not just supply chains, I think in terms of policy as well. And I think this time next year, we'll spend a lot more time talking about China, even though we have done on this show today.
Gentlemen, thank you so very much for your insights. It was great to hear your thoughts about the year ahead in the world of business. Thank you, Gregor Irwin, Alex Capri, and Mariano Machado. Thank you once again for being on Counting the Cost. And that is our show for this week. Get in touch with us by tweeting me at FolibaAJE and do use the hashtag AJCTC when you do. Or drop us an email. countingthecost@aljazeera.net is our address. But there's more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. And that's it for this edition of Counting the Cost. I'm Foliba Thibault from the whole team. Thanks for joining us. The news on Al Jazeera is next.